Good morning. This is your Executive Intelligence Summary for Tuesday, March 3rd, 2026. All right, let's get you set up with the operational roadmap you need for the day ahead.
So here's what's on the agenda. We're going to start with the widening conflict in West Asia and how it's shaking up the markets. Then we'll dive into key macro and governance updates, followed by some firm-level corporate intelligence. After that, we'll see what the sharpest editorials are saying, and we'll wrap it all up with the closing market numbers. Let's begin.
Okay, let's jump right into our lead story, the rapidly expanding conflict in West Asia. Well, on Monday, it became a very immediate, very real event for Indian markets and supply chains, triggering a pretty broad sell-off and some serious logistical disruptions. The really critical factor here is just the sheer speed of this escalation. What we're witnessing is a multi-front exchange. We're talking strikes and counterstrikes that is fundamentally shattering all the old assumptions about route safety. And this, of course, places the Gulf's role as a global transit and energy hub under severe stress. And the shock to the market, it was immediate and it was severe. Get this, the reported market value erosion on the Bombay Stock Exchange was over 6.5 trillion rupees. Just let that number sink in for a second. It really underscores the magnitude of this risk-off move. And this next data point, it tells you everything you need to know about the level of fear in the market. The India VIX, our key volatility index, the fear gauge, it spiked by a whopping 23.5%. That signals some significant investor concern about a wider regional war and all the knock-on effects for, well, pretty much everything, from energy to freight. So, this brings us to a key structural sensitivity for India. If you look at our crude import mix from January, something interesting has happened. Russia's share has actually fallen below 20% for the first time since May of 2022. Meanwhile, our reliance on Gulf suppliers like Saudi Arabia, Iraq, and the UAE is on the rise. And what does that mean? It means supply uncertainty from this exact region becomes a much more acute problem for us. So the strategic implication here is crystal clear. This isn't just a single issue, it's a whole cluster of stresses hitting all at once. We're seeing market volatility, we're seeing real-world logistical disruptions that are hitting working capital, and we're seeing deep uncertainty around our energy supply. All of this is happening while the political rhetoric is getting tougher, which makes any chance of de-escalation look pretty slim. Okay, let's move on. Section 2 is macro, politics, and governance. We've got 3 key updates for you here. First up, a kind of diplomatic reset with Canada. On the cooperation side of the ledger, we're seeing a massive $1.9 billion 10-year uranium supply deal and a renewed push to finalize a trade agreement this year. But on the contention side, the shadow of the Nijjar dispute is still hanging around and public reporting, with claims that India, of course, continues to reject. So yeah, it's very much a dual-track relationship right now. Next, let's look at some hard data on the domestic front. And it looks like things are cooling off a bit. The Index of Industrial Production, or IIP, slowed down pretty significantly in January. It fell to 4.8% growth, way down from a revised, much stronger 8% we saw back in December. And when you dig into the components, you find a really sharp divergence. The main concern here is the contraction in consumer non-durables. But in contrast, infrastructure investment actually accelerated in a big way, which really points to a kind of two-speed economy at the moment. And finally, in this section, there are 2 domestic flashpoints we really need to keep on our radar. First, there's growing unrest in West Bengal, which is tied to identity politics and allegations of wrongful deletions from records. And second, the Supreme Court is now reviewing mandatory blood transfusion testing, which signals an increase in judicial scrutiny of our public healthcare safety protocols. All right, moving into corporate and business intelligence. Let's take a look at how these bigger trends are actually impacting specific firms and sectors. That regional disruption we started with, it's hitting the real economy, and it's hitting hard, especially for MSMEs. This quote really captures the whole issue perfectly. Maritime uncertainty has left their consignments stranded, and that's tightening their liquidity at a time when they are already operating on, quote, thin margins. It's a tough situation. Over in retail, Reliance is making a major strategic shift. They're essentially retooling their fashion business to focus on faster-moving private labels like Azort, speeding up their product cycles to match global fast fashion and specifically targeting Gen Z with new youth-focused lines. This is a clear move to compete directly with those global fast fashion players, but on their own terms. Now, this is fascinating. Let's look at the collision happening between the AI boom and some very real physical resource constraints. The energy cost difference is just staggering. A simple AI text query uses about 6,700 joules, but generating just a 5-second AI video, that consumes over 3.4 times million joules. The resource intensity is on a completely different scale, and that has huge implications for infrastructure planning. And it's not just about power, it's also about water. This is a critical statistic. An estimated 43% of our data centers are located in regions with high water stress. This is all happening even as multiple Indian states are actually offering incentives to attract more of these very facilities. In consumer finance, we're seeing a notable shift. That free airport lounge access that everyone loves, it's becoming a bit of a trailing indicator of discretionary spending. Premium credit card issuers are now imposing much stricter conditions, requiring quarterly spending thresholds of anywhere from 50,000 to 1 lakh rupees just to unlock those perks. Okay, let's pivot now from verified intelligence to some strategic analysis. Here is what the opinion pages are arguing about today. First up, an editorial titled "The Waning Sheen" argues that February's strong GST numbers might be a bit deceiving. The core argument is that the headline figure is getting propped up by taxes on imports, which are themselves being amplified by a depreciating rupee. So, the worry is that this could be masking some potential weakness in the domestic economy. Next, there's an analysis of Kerala's Justice J.B. Kashi Commission report, and it highlights a really challenging finding. The author notes that the report found the socioeconomic conditions for scheduled caste converts to Christianity are, and I'm quoting directly here, far more dismal than for scheduled castes before conversion. And that, of course, raises some very difficult questions about social mobility. And finally, echoing what we saw in the corporate section, this piece argues that India's big AI ambitions are on a collision course with environmental reality. The crucial point they're making is that we need a much more realistic accounting of the massive power and water footprint of data centers, especially considering where so many of them are being built. Let's conclude the briefing now by returning to the hard, verified market data from Monday's close. So here is the final snapshot from Monday's close. The Sensex ended at 80,238 and the Nifty at 24,865. As we discussed, the India VX was up that 23.5%. Oil rose significantly, and the BSE market value erosion exceeded 6.5 trillion rupees. The key takeaway here is clear. Geopolitical risk in West Asia is now the dominant factor driving market volatility. That concludes today's briefing.